So here's the tips. GME's getting a tiny amount of covering over the last 3 days, but not very much. I don't think it's indicative of anything squeezing off. Mostly, again, this just looks like people are buying calls and shares and like the price is going up. It's not super squeezy. I mean, mid caps have benefited a bit over the last week with rate cut expectations, but I don't think that's it, right? Those people are just a little bullish. Again, this reminds me a lot of that period back in like 2021 before like May OPEX, like this. Very similar price action to these intervals where like nothing really squeezed, but it just kept going. It kept going up prior to the split, that is. But yeah, I mean, it mostly looks like there's some bullish interest on the chain, and it's helping support prices and bring prices up. Upstart squeezed off a little bit today, really kind of all at once. Got quite a bit of covering. This actually has, it's well above Gamma Max, but it actually has some calls out at 35 and 40 still. So it may have a little bit more room to keep running, provided IWM keeps running and driving that positive pressure. Fubo moved up a little bit today. It did actually cross back over, which usually it only does both prior to earnings and prior to larger runs. Which we've seen in the past. Earnings expectations should be pretty good for Fubo. They need to beat negative 14 cents a share, but they've been pretty consistent in beating over the last 5 earnings. So I think they could pull it off. I think more importantly will be the lawsuit with Disney. Top's starting to do a little bit of a thing. Might be getting kind of illiquid. That doesn't benefit from the ETFs as much. Beyond bounced back over 7, tested 750, rejected off that into close. May not be ready to fully run yet, but that's definitely a good sign. And if it can pressure off those 750 and $8 calls, it could actually start to run up a bit. GoEV also seeing a little bit of covering, also part of the R2K now. Still being shorted in one of its ETFs, maybe 2 of them now, but moving up, getting pretty close to testing the $3 strike where the majority of the sold calls are present. SPX today moved almost up to the market maker's expected move. It's 64 basis points. After failing its initial breakout over VN this morning, we pushed over VN again into close. This will probably leave positioning weak as we move into the overnight. And I wouldn't be surprised if we see ES pull back almost immediately. We did make a new high on ES, just slightly higher, like a couple bucks at what's that, 721.25. But we've seen every one of these new higher highs fail. And so the situation may be very similar here. We do start SLD tomorrow. We are a decent distance from Gamma Mac or Gamma Neutral, and there is a good chance that any selling during SLD will be insufficient to pressure us back to GN. Also, above 56.50, which we currently are, Charm is fairly supportive into Friday's expiry. So watch out for that. If we lose 56.50, we can pull back during the SLD, but if Charm remains supportive, that could diminish the effects of any selling for margin that may be done. Dollar down a little bit today after rising earlier in the day, and yields fell alongside it, with the 30, 20, and 10 taking a pretty big hit. Correlation continued its breakdown, both on the 1 month and 3 month, and we are still seeing, NASDAQ drastically underperform, the S&P, Dow, and the Russell. VIX futures today up, despite, VIX up too, and that expiration is now AM expiry on the VIX contract. So we'll be opening tomorrow on the next contract in front on VIX. Carry trade lost a little bit of leverage, but not much. It's grinding down pretty slowly. The yield curve's kind of starting to uninvert a little bit. And alongside that, the forward expectations for volatility are starting to rise. Move bounced back yesterday. Might see it move back up a little bit more today, and starting to pick up correlation with 3-month correlation. That could be a good sign if we see bond vol start to increase as dispersion breaks down. That usually means that the market is also going to go down, as you can see in several instances in the past. So possibly like that. Something there. Skew picked up a little bit today, so a little bit more tail risk hedging. Number of stocks in the S&P above the 20-day moving average peaked and fell back to 76.5% of the S&P over its 20-day moving average today. Might be starting to get kind of capped out on the move and breadth. I know RSP managed to continue climbing up throughout the day, but IWM's getting a little bit overextended. So's Dow, both of which have moved up just a shitload this week. Positive correlation, it dropped a little bit between VIX, cash VIX and VIX contract in front, but still plus 11.54%, which is, still 8% higher than where we were at last week. So that is becoming more positively correlated. It's still becoming positively correlated rapidly. And we're going to continue to keep an eye on that as the correlation picks up. Fed fund futures have actually started to price out some rate cuts in the earlier part of the day. And then after Kugler spoke, they priced everything back in again. And that's about it. We're not really topping out here just yet on the SPX chart, but we could see a rejection at like 56.80 here on the trend as we move up to our second test. So thank you guys so much for tuning in. I will see you bright and early tomorrow morning at market open. Thank you so much. I hope you all have a great night. I'll see you later.